You are listening to chartingwealth.com for Friday the 17th of November 2017. Things are different today on Thursday as the market closes. The S&P 500 up substantially 0.82%, but the big gainer is the Qs, the NASDAQ 100, the tech stocks up 1.28%. We see likewise 20-year bonds way down 0.87%. Gold about even 0.01%, 0.1% down, so almost steady. First, for the 10 minutes that we have you, let's jump quickly into the S&P 500 first as I fire off the stopwatch. We see the S&P 500 so far for the week, we have a red spinning top. Means lots of indecision. The first after 11 up candles. Price percent oscillator is sideways. Derivative oscillator losing energy. What do we see going on the 2-day chart? Well, sliding sideways, tending up on the latest candle. And again, that's only the first day of the latest 2-day candle with the up move. However, derivative oscillator continuing to gain downward energy. Now we do see that the price percent oscillator has gone, well, pretty much not quite flat, still tending down. And of course, as we look at the 4-hour chart, what do we see? Well, it is headed up, but has not crossed over going up yet. Now, don't forget that our weekly chart is still in a confirmed up move. Our 2-day chart is, of course, in a confirmed down move. And our 4-hour chart is moving up but hasn't crossed over going up. So until we have the 2-day and the weekly moving in the same direction, along with a pullback on the 4-hour, we don't have a trade on the S&P 500. We're just sort of watching what's happening in the market right now. What do we see going on the Qs? Q. Well, first, let's look at the weekly chart. We see that the weekly's in a confirmed up move. And again, it looks like the latest candle's probably going to be in line with a continued up move. Not quite as good as it's been over the prior 2 weeks where we were outside the Bollinger box. Started off a little slower for the week. Derivative oscillators gaining energy. Price percent oscillators moving about the same it had in the prior week. Not as much as in 2 weeks ago, but when we look at the 2-day chart, it's still in a confirmed up move. Looked like it was heading down toward a down move, but then bounced back around on the price percent oscillator. However, derivative oscillator continuing to lose energy. We are still below the 2-day trend line, but above the weekly. So we'll continue to watch things. Now remember, the weekly and the 2-day are still in confirmed up moves. What do we see going on the 4-hour chart? Well, it's trying to go up. If it does cross over on Friday, you might look for a jumping in point. So again, keep your eye on the prize. Remember, the 2-day and the weekly still in confirmed up moves. And if the 4-hour goes in that same direction, you might look to jump in and do a practice trade. And with that, of course, you'll need the trade worksheet, which we provide to all of our subscribers. It's free. Go to chartingwealth.com and sign up for our subscription service. Thank you so much. Let's keep looking at these charts. TLT, the 20-year bond, down 0.87% for the day. Weekly chart is in its 3rd week of up movement, but still below on the price percent oscillator, so still in a confirmed down move. However, as we look at the 2-day chart, we see, of course, that it's in a confirmed up move, so that schizophrenia means right there from the start, don't have a trade yet. We've either got to see the up move be strong enough to pull over the weekly at some point, or the up move to stop, the 2-day to cross over going down, and there to be a jumping in point. So we've got nothing there. We're just monitoring what's going on. And again, remember, unlike the professional traders on Wall Street, we of course want to be professional as far as our effort goes, but we don't have to trade. They do. That gives us a distinct advantage over them. First rule, don't lose money. Second rule, make money. What do we see going on the 4-hour chart? Well, it crossed over going up. Looks like it could be headed for a crossover going down. We'll just continue to monitor, see what we see. Continue to fill out your daily market worksheets. Of course, at the close of business on Friday, we're going to provide you with the materials you need to fill out your weekly market worksheet. Let's go back to the weekly chart. And lastly, we'll look at gold, which is about even for the day. What do we see gold doing? Hanging around that 120, 121 point. Really just sliding, well, 120.50 and then 121. So just sliding sideways as it has been going on about 4 weeks. We actually hit the same bottom all the way back. What is that, 6 weeks ago? So again, we're just continuing to monitor. We are in a confirmed down move on the weekly. We are also in a confirmed down move on the daily, trying to cross over, the 2-day, trying to cross over going up. It's only the first day of the latest 2-day candle. Maybe getting ready to do that. If indeed that occurs, it means we just have schizophrenia. We have the weekly going down, the 2-day going up, which again just means confusion as far as where the trend is going. Remember, we want established trends. We don't forecast, we trend to follow. Safest, best place to be is following a trend. So what do we see going on the 4-hour? This sideways slippage tells us nothing. We are waiting for gold to break one way or the other. Which way is it looking? Well, that again is hard. Weekly still in a confirmed down move. 2 days trying to cross over going up. We're just going to wait and see what we see. But remember, it will be led by the 4-hour chart. And unlike our other charts, the 4-hour chart on gold is a chart that we can time and time and time again follow. It just works. Not working right now. Why? Because we're dealing with an oscillator. The price percent oscillator. Oscillators have to have movement. If you don't have movement, they don't oscillate and read very well. That's what we're having, a sideways slide. So until gold decides to do something, and it may be waiting on seeing what the stock market's going to do. Been down a lot this week and up over the course of the day on Thursday. So we'll just wait and see how things shake out. You can count on us to keep you posted. My friends, all the best. Hope you enjoyed Chapter 5 of the book. We will continue to bring those things to you as they are put out. Again, you need to be a subscriber in order to receive that material first. And we just continue to push through it on a daily basis. We so appreciate you. Hope you appreciate what we do. You have questions, problems, concerns. All you have to do is email us, cw@chartingwealth.com. We'd love to hear from you. All the best, my friends, from the entire team here at Charting Wealth World Headquarters.